I'm pleased to say the UK's Chief Treasury Secretary joins us now. Danny Alexander, welcome to On the Move. And it's been a tough couple of months in general for the government. Double-dip recession, calls to ease the austerity measures. Are you sure you're on the right track in terms of the path that we're carving?
Well, of course. I mean, those were very disappointing figures that we saw last week on the growth front. And in fact, it's been a tough few years for the UK economy, because don't forget that we are recovering from the deepest recession we've seen for many, many decades, the worst financial crisis since the 1930s, the biggest budget deficit we've had as a country in modern times. And all of those things mean it is going to take time to get the UK back to sustainable prosperity. And a critically important part of that is to maintain the commitments that we've made to deal with the enormous budget deficit we inherited.
But you say in terms of keeping the austerity measures there, in David Cameron just there saying it's important for the cost of borrowing for the UK to keep it low, but first quarter we actually saw gilts fall. We saw people lose money on the UK gilts, borrowing costs on the rise. Are you concerned that you can't keep the borrowing costs at the very low levels that we've been seeing?
Well, it's a vitally important benefit of sticking to the plan we've set out, that we keep interest rates in this country low. When we came into office in May of 2010, UK bond yields were tracking the likes of Spain and Italy. Now they are one of the lowest levels that they've ever been in our history, and that's a reflection of the confidence that people have to invest in the United Kingdom because of the plan that we've set out. And that's not just a financial benefit. It's something which feeds through to low mortgage costs for millions of British people, to business interest rates too. So this is something which is really helping the UK economy as a whole through this very difficult period.
But what you need to convince investors now is that you can get growth at the same time as austerity. Where are we going to be seeing growth in the second quarter? What's going to be the driver?
We've set out a very comprehensive growth strategy, focusing on exports, focusing on investment in infrastructure, focusing on deregulating the British economy to remove some of the burdensome regulations that slowed business down, tax changes to give Britain the most competitive corporate tax environment in the G7 by the end of this Parliament, bringing corporation tax down year on year. Just this month alone, we've got major plans starting on credit easing to reduce interest rates for millions of British small and medium-sized enterprises. We've got a youth contract which is designed to help get young people off benefit and into work. We're making real progress with our plans to improve the creaking infrastructure of this country. So there are big changes we're making to support economic growth in the UK.
Talk about infrastructure though, because we had the OECD economist Christophe Andre cited in the Sunday Telegraph saying we should be borrowing more to fund growth in infrastructure. How are you going to fund the growth in infrastructure without having to have even bigger deficits and even more debt?
Well, of course, the OECD and the IMF have both given strong, consistent support to the fiscal stance of the United Kingdom, and there's no change in that. In terms of infrastructure, we've obviously set out at our autumn statement last November additional public funding to go into infrastructure over the course of the next few years. But we're also seeking to unlock pension fund investment into British infrastructure, an area where UK pension funds have not historically invested as much as their international comparators. And so we've put in place a new pensions infrastructure platform, which will see billions of pounds flow into UK infrastructure over the next 2 years. That's a way that we can get more money into infrastructure without it necessarily having to be taxpayers' money that's put on the line.
So you're convinced second quarter we'll see a rebound? We won't be in negative territory anymore in terms of GDP?
Well, as a government minister, we got ourselves out of the economic forecasting business when we set up the Independent Office for Budget Responsibility. That organisation forecasts growth of 0.8% over the course of this year, strengthening growth next year and the year after. And clearly we're doing everything that we can as a government to support this country as we try and do everything we can to get back to growth.
We have the hunt on, of course, for Bank of England Governor. Mervyn King steps down in 2013. We've just had Jim O'Neill of Goldman Sachs Asset Management's name seems to be flung into the ring as well. Would he be a good leader? Who would you like to see as the new Governor of the Bank of England?
As a Treasury Minister, I'm not going to get into that. We'll have to make a decision in due course. I'm sure there are lots of good candidates around.
And, of course, you are holding a conference about the future of financial services regulation. How can policymakers get the balance right between encouraging the financial services but also making sure that we're having competition?
I think there are two things. I think firstly we need to have tougher regulation of financial services, not just in this country but across Europe and around the world. That's necessary to deal with the enormous crisis that we saw. But in doing so we mustn't deal a damaging blow to an industry that's very important not just to the UK but to the whole of Europe. One of my messages this morning is that the City of London needs to present itself more as an asset to Europe and less as a UK vested interest.
Danny Alexander, thank you very much indeed.